28. That's how many insurance offers I got in the mail in just 2 weeks. One company sent me 15 of these things. If you've checked your mailbox lately, you're probably drowning in them too. Auto, home, maybe both. Unbeatable rates, instant savings, guaranteed quotes. But before you call the number on that flyer, here's what's actually happening behind the curtain. In the next few minutes, I'll explain why these prices almost never match reality, why calling the number usually puts you at a disadvantage, and the simple way I shop so I never deal with this junk, and how a 10-minute habit can put an extra $25,000 in your pocket. I've seen both sides with my own policies and as a former agent. But I'll never sell a policy again. I can help way more people this way. So let's start with the biggest trick. That price on the flyer, it's grid pricing. Based on a perfect world. Perfect credit, brand new roof, state minimum coverage. As soon as a real human runs real data, your driving history, your roof age, your actual coverage needs, that teaser rate will jump. That mailer isn't a quote, it's a fishing lure. And here's something they don't tell you. If you get 5 flyers from 5 different agents for the same insurance company, they're all using the same exact rating software. The rate is the rate. The only way one agent from the same company beats another is by cutting your coverage or clicking discounts you don't actually qualify for. That's not savings, that's moving the goalposts. So if you already got a quote from company X, no need to waste your time calling another agent from the same company, no matter how low that teaser rate on the flyer is. If the company, the prospect, and the coverages stay the same, so will the rate, no matter what their flyer says. So I'm not saying never call. If you haven't already quoted with company X, and maybe you like the face on the flyer, go ahead and give a call, just temper your expectations. And here's why those calls feel intense. Direct mail campaigns are expensive. Response rates are tiny, often 1% to 5%. So when someone finally calls, that agent isn't just quoting you, they're trying to recover their marketing costs. So that's why the pressure feels higher than with, for instance, an agent a friend referred you to. It's not personal, it's math. So people ask me, Pete, how do you shop if you know the game? I don't use mailers, and I don't use sites that sell my data to 10 agents in 10 seconds. I keep a short list of favorites, a couple local independent agents who shop multiple companies, and a few local captive agents like State Farm, AAA, Farmers, etc. The first year it took me maybe about an hour. Now, it's about a 2-minute call to each once a year. Let them know nothing's changed. They email me the numbers. No spam, no pressure, just quotes. Simple. And I get it, life's busy. We'd all rather just set it and forget it. So why do we even bother? Because it all adds up and it compounds. If that hour saves you just $100 a year, invested in a basic ETF averaging 8%, and in 20 years, that's nearly $5,000 from an afternoon of phone calls. You save $500 each year, that's nearly $25,000. And the math on your time works out to somewhere between $245 and $1,235 an hour, depending on what you save. Nice. So this is seed money. You decide what to do with it. High yield savings for your emergency fund, your vacation fund, knock out monthly bills, or let it grow in an ETF for retirement. It's your money again. That's how you turn a boring insurance bill into actual wealth. Year one's about 40 minutes. Every year after that, about 10. Those calls get faster and that money keeps growing. So what do I do with all those insurance offers? Nothing.